most investors who are standing on the sidelines or actually already accumulating into Ripple so that they can make the best use of that opportunity. What's going on is that I believe there is very strong risk aversion on the markets. Risk aversion here with the cryptocurrency class means that if you're holding longs or holding positions in the cryptocurrencies, they have become a very high leverage, and you're not guaranteed that these are really going up. And therefore, you simply liquidate them, and this would start a sell spiral into the market. That's really that direct. So long as we're having risk aversion, the market is going to be going down. So long there's higher interest rates, there's going to be more maintenance margin required if you're going to be holding positions, either paper positions like CFDs or actual futures. I'm not even sure if you have Ripple futures in the first place, but so long as a higher cost for finance means you would simply deleverage or liquidate your positions, and therefore you're seeing weakness in the crypto assets. It's looking like we're going to have to do a resegregation if we expect to do trades. A resegregation, we were looking at this for our chart a bit earlier. We'll remember there has been 3 and a 4. We're expecting that wave 5 breaks the neckline or tests the neckline. It is possible if we have to proportionally segregate that 5 is finished. That this is an ending diagonal. It is over. We can either have just the 1, 2, 3, 4, 5. This is a correction in some kind of a wedge, if the fundamentals permit. Yes, the fundamentals are the only fundamental that's going for Ripple, of course, is there is a breakout when we hear good news that Ripple has won that liquidation case. This is different, of course, from the whole cryptocurrency class. It will find legs then to break higher. So until the fundamentals change, it's possible that this correction that we're seeing here is just leg A into the correction. 1, 2, 3, 4, and 5. Get another leg B, then another leg C. We have been doing a lot of head and shoulders, and that's why we need to do that. We need to do that segregation if we're going to be trading it. And if we do it here right now, it will take the whole time of the session. So allow us to stand out of it for the time being, and we will hopefully have it with us tomorrow, fully segregated, checked, because we'd have to check the momentum cycles themselves. It looks like there's continuity on the 4 hours and the day. Really, the day is contained. All right, so until we get a complete segregation, let's just hope you're able to bear with us. If you're long Ripple, you would want to have a hedge below level 1. We will remember this chart very strongly. According to this chart, there is possibility just that we have finished wave 5 and we have finished wave 5, we can actually get to do a deeper head. So this is a head and this was supposed to be shorter to take out that neckline. So in order to really tell if it's going to be just a shoulder and take out that neckline or do a deeper head, we have to do a proportional segregation, measure the waves, and that is going to take time. It's possible now that if this level 5 is finished, you correct the whole structure, you correct all the way to 54. At 54, 0.547. This is the important now take to make, or take to put into good consideration, and we're buying on top of that level 1, so I expect we're long somewhere. We want to have a short or we have a hedge at just below level 1. Right, so you take out this level 1. It's something like if the market takes out, sorry, this level 1, it is something like 0.61 cents, so let's say just 60 cents. I believe we are long as high maybe as 75, 72, I'm not really sure. If we are long, we want to have a hedge, meaning have an equal amount of shorts to our long entries below level 1, because if you fall below level 1, you're going to do another neckline. So you're going to do another head in the first place. If you're going to do another head, you want to fix your risk or fix your loss at a specific loss and be making money on the short side, so that when we're able to measure proportionally that head, you can close, be into profits, and then reverse back into longs, or use the money that you have made on the shorts to close out some of your longs, and then add on a confirmation on the long side. Keep in mind that on this daily chart, we're showing that possibility of having another head. It's a bit delayed, of course, but this is a wave C, so it is a very lengthy, prolonged structure, and can take you all the way down to this neckline. Neckline here appears to come in at 50 cents and even lower. So you have to have that hedge. We have seen, of course, bearishness in Bitcoin. We've seen bearishness. I know there's bearishness in Ripple and in Ethereum. We've not done that yet, but there is bearishness in Ethereum. So it will be the same. So if you get that second head, right, you're looking at a lot of level ones here. That's that level one. Goes all the way down to 40 cents. Right, the level one. So we have to do a good segregation, do the good projections, but for the time being, to protect yourself, you need to have a hedge at 60 cents. If you're holding longs at 70 plus, 75, 73, 72, whatever longs you